The benefit of dividend investing is the ability to create cash flow without selling your position in a stock. This income can be used to pay bills, invest in other companies, or reinvest back into your holding. One of the best examples of a dividend-paying stock is AT&T, which has seen 36 years of consecutive dividend growth. If you want to learn more about AT&T, I did a full stock review on the company, which is linked in the description below. In this video, I'm going to demonstrate how investing in AT&T can provide you with massive dividend income. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. Today, I want to show you how even when investing small sums of money, you can build up a significant source of income from AT&T. Dividend investing is a long-term strategy and works best when you reinvest dividends back into your holdings. This creates a strong compounding effect, which I go into great detail about in my video titled The Power of Dividend Investing. To demonstrate how this works with AT&T, I'm going to use a dividend reinvestment model. To make this model, I took the historical statistics of the stock and projected them forward over time. AT&T is currently trading at $28.61, which gives it a 7.27% dividend yield. The dividend has a 10-year compound annual growth rate of 2.21%, and the stock price has been somewhat steady over the past decade. For the sake of the model, we'll match the compound annual growth rate of the stock price at the same 2.21% of the dividend. First, let's take a look at how investing $100 a month in AT&T will perform over time. The longer you invest, the greater your return and income will be. After 25 years, you will have a total value of $119,650 off of $30,000 total dollars invested. However, you will be receiving $8,088 in dividends annually. To reframe this, you would be receiving 27% of your total dollars invested in annual income. Let's say you keep reinvesting another 10 years. In that case, you would have a total value of $322,729 and receive $21,789 in annual income. This is all off a total investment of only $42,000. You'd be receiving 51% of your total investment in dividend income every year. So if you stopped reinvesting and started to pocket the cash, you'd be doubling your initial investment every 2 years without having to sell any stock. This example of investing $100 a month is very realistic and could provide a solid source of additional income in retirement. However, let's say you wanted to try a more robust investing strategy and see how that will perform over time. Let's step it up to investing $500 a month in AT&T. After 25 years, you will have a total value of $598,251 off of $150,000 invested. Additionally, you'd be receiving $40,441 in annual dividend income. After 35 years, you would have a total value of $1.6 million and receive $108,935 in income. This is all off of $210,000 total dollars invested. So again, if you start to pocket the dividends, you'd be doubling your initial investment every 2 years. Most importantly, you would not only have created a significant source of cash flow, but something that could act as an income replacement. Alright, so let's say you wanted to push it to investing $1,000 a month. After 25 years, you'd have $1.196 million in total value and receive $80,883 in annual dividends. This is at a cost of $300,000 invested. After 35 years, you'd have $3.2 million in total value and receive $217,870 in income, all off an investment of $420,000. So again, you'd be doubling your money every 2 years. As you'd expect, the numbers get better the more money you invest, but the percentage return doesn't change in these monthly examples. The more time you let your money compound and reinvest, the greater percentage return you'll receive. I would consider this to be a rather conservative but reliable investing strategy. Many people criticize AT&T because the stock price has been stagnant for a long time now. Additionally, it's underperformed the S&P 500 index, including dividends, over the last decade. However, I still think there's a compelling investment case even if the conditions around the price remain the same. I view an investment in AT&T right now as locking in a 7% annual return on your money that will only grow over time. Additionally, you're receiving this return as income, which gives increased flexibility as mentioned previously. And if you're worried about taxes, you can throw that investment in a Roth IRA and have that money grow tax-free. Over the long term, the compounding effect of dividend reinvestment means that AT&T can become a massive source of income. Of course, to believe this, you must believe in the long-term ability of AT&T to generate cash flow and pay out its shareholders. Obviously, I believe this to be the case and describe why in my full stock review. By no means am I suggesting to invest only in AT&T, but it certainly can be an aspect of your portfolio. Personally, I have $3,947 invested in T, giving me 136.65 shares and a current yield on cost of 7.2%. I plan on this being a holding of mine for a long time and will be purchasing more of the stock whenever it's at a good value. Even if I don't invest any more money and just let my dividends reinvest, I will still see a significant return. After 35 years, I'll have $99,098 in total value and received $6,611 in annual dividend income. That's a 167% return on my initial investment in annual cash flow. The more you invest and the longer you let it compound, the greater your income will be. Thank you for watching Dividend Data. I'd greatly appreciate it if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel on Patreon and be a part of making these videos happen. The link is in the description. Please leave a comment below, and thank you for watching.